From here on out, the note will be partitioned into two segments. One will feature the group's different individuals in their latest review or what there's mind. Letting it be known, and And afterward will begin the drill. In any case, as you have without a doubt seen, the business sectors are moving rapidly both when the drill. The financial exchanges are, indeed, making a quite large revision. The slump we've seen throughout the last week has brought about a fairly huge decrease in security rates, a decrease in item costs, and in specific cases, a breakdown of yield spreads. Apparently, the difference between high-return security rates and depository bills, that is, depository securities, is starting to extend. We really do have a perspective. However, the concern is, pervading the business sectors in various ways and through different pointers. I'd need to present it then. In the event that you've been tuning in, you've heard it here previously. However, for the people who haven't, let me make sense of. First leisurely, then at the same time. We've been examining the moving downturn, which has existed since the central bank started climbing financing costs in 2022. Indeed, lodging basically entered a downturn when the Fed started climbing rates. Land workplaces and business land were at that point encountering a slump. Multifamily land gives off an impression of being an issue nowadays. Cards have been known to slow down. They have, one might say, balanced out yet slowed down at unacceptable extension rates. As you can see by seeing deals, we're seeing a decrease in capital spending, a resurgence in buyer certainty and lodging that was starting to recuperate. After a crawling downturn, apparently we are right now in the at the same time stage. Many individuals are beginning to understand, and we accept that perhaps the thought that expansion is the issue has been off track and that this moving downturn will stop when costs decline. As per Amazon's report the previous evening, it's apparent that customers want and are getting lower costs, which upholds my declaration that collapse and falling costs are the dangers. The customer is really responding to a portion of the less expensive estimating, even in the vehicle business, so it's not yet imploding. Nonetheless, declining costs, which are dangerous for organizations, will make their edges contract. Evidently, deflationary signs are the justification for the at the same time. We got the buying supervisor record, PMI, this week, and today we got the work information. Since both of those are recessionary, the idea that we are in a downturn is beginning to build up some decent momentum. Truth be told, the S-rule in the joblessness report basically shows that the joblessness rate has expanded by 50 premise focuses from its low, as estimated on a 3-month moving normal premise. Since that outing was fruitless, a lot more individuals are currently thinking about a downturn. Then, at that point, when we say 0.8 to 0.9 at the same time, we're not in any event thinking. In reality, that would be disproved by the moving downturn part of this situation. We're not expressing that by any means, but rather we are saying that this accentuation on evaluating power will be significant. It's significant on the grounds that, all things considered, in the mid-1980s, when taking care of Administrator Volcker was endeavoring to control expansion by forcing twofold digit financing costs, expansion was additionally at twofold digits. Subsequently, that was a huge support on the off chance that he committed an error. The Fed really has less space on the grounds that our expansion rates are fundamentally lower now. Besides, I truly do believe that keeping costs higher for expanded timeframes and expecting that expansion was the main pressing concern has seriously endangered us. Notwithstanding, I accept this soothing period as valuable in light of the fact that recognizing the issue is a portion of the fix. All things considered, it harms a ton in the close to term. There is a lot of disarray, which is the reason these redresses have been made. Numerous people have accepted that the world will work in a specific way, and afterward out of nowhere it's not. Also, I accept that something you'll hear an ever-increasing number of about in the titles is the thought that the convey exchange, which shockingly consolidates the yen, is slowing down. This infers that numerous financial backers and examiners acquired yen, which really made them short yen. In reality, you benefited in the event that the worth of the yen declined. Furthermore, you are getting compensated more in the US. I had the chance to hinder with a new funny story. While requesting a McFlurry in China, McDonald's finds out if you would like Nvidia keychain, which costs $20. Nonetheless, the issue is that under 10,000 clients have the option to get to that. Subsequently, their Nvidia keychain, which retails for many dollars, is at present sold out. As to Elon commented, "All things considered, I will have some." He guaranteed not to know that this was occurring. In case it isn't obvious, to buy this Nvidia keychain, click the Principal Connect in the portrayal. In spite of the fact that I don't know whether this is a joint endeavor, both McDonald's and Nvidia have posted about it in China. Anyway, this item could sell for a great many dollars before very long. We don't have numerous amazing chances to buy interesting fortunes like these. In any case, we just have 100 pieces left, so rush and snap the connection in the depiction. A part of the convey exchange, from certain perspectives, was getting yen and afterward buying the Mag 6 or one of the wide-based benchmarks, for example, the S&P 500 or the NASDAQ 100, which are both firmly weighted with the Mag 6 in the US. Once more, we don't have the foggiest idea the amount of this really occurred. A few suppositions are made. All things considered, as per a report by Deutsche Bank, it very well may be $20 trillion. Presently, think about that. We have about $25 trillion in gross domestic product. Might you at any point see this convey exchange? That was transforming into a $2 trillion agreement exchange. I don't know whether that is exact. One more method for seeing it is to say, I think the worldwide value markets are esteemed at about $130 trillion at the present time. In this way, $20 trillion is likewise an exceptionally large market exchange, with regards to $130 trillion. Now that this convey exchange is finishing, it appears sense to see how savagely the yen is really appreciating, yet we are uncertain of the exact sum. The people who had put down wagers on the yen's proceeded with devaluation are presently moving their positions. They are either diminishing their misfortunes or expecting to sell because of edge calls. They are constrained to sell, so it's the other thing that may occur. We've endeavored to sort out what else may be off base and, indeed, where is the greatest influence out there. Furthermore, that convey exchange was influence, not even a shadow of a doubt. That is one wellspring of influence, then. Confidential value is another. And this is where business land, especially multifamily in the U.S., could be helpful. Accordingly, we realize that the convey exchange has been developing for about a similar measure of time, since the 2008 to 2009 emergency really, so we could date it to 2011 to 2010. In the realm of private value and confidential credit, there was an interest for yield in a climate with very low financing costs. So we believe that a huge exchange has been the passage of private value and credit into the multifamily market. We're watching out for one more wellspring of obligations since the yields were utilizing them up and the rents were